Hello everyone and welcome back to my channel. Now the question I get asked the most as an accountant is this question. I want to start investing, right? Everyone always wants to start investing. They want to put money into the Roth IRA or 401k account, but they just don't understand where they should put their money, right? This question is specifically when it comes to retiring. Like, where should they put the money into retiring? Should they put it into stocks? Should they put it into bonds? Like, it's just all these questions and they're not certain. And it's a very legit question. It really is, because people hear about, oh, you should always invest in stocks, index funds, ETFs. It's a lot of information. And unfortunately, a lot of people do not invest because of that reason. They feel like they're going to put money into something that's risky or put money into something that's not going to give them a big return. So they end up doing nothing, which to me is a wrong decision. And this is the answer I tell people when they ask me that question. And it's a very simple place you should put your money in. That it's so simple. And I wish people understand this is target date funds. Also, you might hear some stuff out there. They call it TDFs. Target date funds is hands down the best place to put your money in. Now, if you don't know what that is, let me explain to you, okay? It's kind of self-explanatory because in the name, right? And the name is saying target date. The target date is what date do you expect to pretty much retire? Not the date, but the year. It goes by years, not the date. But what year do you expect to retire, right? So let's say right now, to keep the math as simple as possible, let's say right now you are 40 years old and you want to retire at the age of 60. Right now we're in 2025. So that means in 20 years from now, you want to retire. So you will literally go and buy a target date fund that is for 2045, right? You just add 20 years from today, 2045. They already have funds with mixed assets in it, with stocks, bonds, and whatnot in these funds. Now, what they do is, the older you get and the closer you get to retirement, it starts shifting the allocation, right? Say, for example, like a lot of people a lot younger, you want to go heavy into stock. Why? Because you have a longer period to retire, so you're able to withstand the volatility within the market, right? When there's ups and downs, you're able to deal with it. But the closer you get to retirement, you want to minimize that. So what it does is, in this example, let's talk about the stocks and bonds. Let's say, in your early ages, the stocks is damn near like 10%. But the older you start getting, you want to get less risky. So now the bonds start coming into place, because the bonds is more of a stabilizer. So the older you get, now all the gains you were getting from the stocks is now starting to get invested into bonds. So you're getting heavier into bonds, and it's reducing the amount of stock now that you have as well. That right there is an excellent thing, because people always worried, what if they're too risky? Like, you want to know these things, and I get it. But when they do that, the allocation, right, which is, there's fund managers that do it and they specialize in it, and they're always making sure that the fund you invest in is being invested properly, right, and your risk is being adjusted correctly. So you need to understand that too. This isn't like some type of regular automated type thing. No. Someone's actually managing it. They are making sure that you're able to capitalize from all the gains that you made, and they're reducing your risk. Because the older you get, right, the closer to retirement, you do not want to be in any type of risky type of stocks or in a risky market. The market could be really risky. You want to just capitalize on all the money you made to make sure you're securing your future. That's all it is, guys. It does all the rebalancing for you. It does everything for you. There's nothing you need to do. You literally need to just put money in every month, dollar cost average it, or yearly, whatever you want. Put money into it, and that's it. Set it and forget it. You already know everything is being handled. Now, there's a lot of people out there, especially if you see YouTube videos, people always saying, here's my strategy, and it's really complicated. But you need to understand that a lot of people just love finance. They love finance, and they like tinkering with the numbers. They like, guessing what the market is going to go. They like doing that. Some people love being hands-on and creating their own portfolio, right? Some people like doing that. But the majority of people in society don't, because they don't understand it. They don't understand the logic and what's going on with investing. So what a lot of people do, like I said, unfortunately, is they don't invest. But I always tell people, man, target date funds by far is the best thing for you to do. Now, there will be people out there, of course, but this video is for someone that is getting into finance. You're just getting into finance. You want to keep it as simple as possible. I know there's going to be people and they're going to put down the comments, no, that you should do this and that. No one is wrong in that situation. No one is wrong if you are an anti-target date fund and if you are, for target date funds, because everyone's risk tolerance is different. Everyone's risk tolerance is extremely different. Some people want to be extremely risky. Some people don't. And that's okay. But for the average person, right, that goes in a 9 to 5 and puts money in a retirement account and don't have time to tinker around and try to, create your own portfolio, or they don't have the money to get a financial advisor, this by far is the best approach. I highly recommend this to everyone. I know a lot of people who have so much money in their retirement account and that's all they have. They have a target date fund and they set it and they forget it. That's it. And also, you recognize this. You can set it and forget it, and it doesn't mean you're locked into 2045. It means you're locked into a target date, that you can't take the money out. Yes, you can move the money around to something else if you're not satisfied with the performance. You can do that. But just understand, guys, that's the most efficient, low-cost way for you to invest, and it's really, really simple. And if you don't have it, I highly recommend, especially if you're not saving and investing, I highly recommend you do that. You look into your company 401k. A lot of 401k accounts offer that. If your job, unfortunately, does not have a 401k, you can open up a Roth IRA account with Vanguard or Fidelity. Anyway, they all have target date funds. All these brokers have it. You could put money into a Roth IRA, open up I can't even think right now. To open up a target date fund. Thank you. You can open up any of them anytime, guys. It's the best thing to do. Hands down. Highly recommended. Highly recommended. All right, guys. Well, as always, though, I got to mention this. As always, do your own research, of course. I'm just giving you a good breakdown of what a target date fund is. But always do your own research. Never just trust a guy on YouTube to tell you what to do. Okay? Never do that. I'm just giving you some guidance. You could do some research, do a quick Google search, and see if that's something that you would like to have. And you will see everything I'm saying in the video is pretty much spot on. Right? It's pretty much spot on. But of course, every broker has different type of risks, different type of costs. So as always, just do your research. Choose a big company. Like Fidelity is a massive company. I don't sponsor them. Don't sponsor me. But they're big companies. So you will hear if any malicious things are going on. That will be all over news. Fidelity. So trust a company like Fidelity and like Vanguard, and that will be your best approach. All right, guys. Well, catch you guys on my next video. Really hope you enjoyed it. If you got the time, please hit the like, leave a comment, and subscribe. Peace.